This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping today's podcast on March the 8th, 2018. Our time is 8:08 Mountain. Now, coming up, we have the time change this weekend. It's spring forward, fall back, so the clocks go ahead. Next weekend, it's St. Patrick's Day. On Saturday. Can you imagine the party that's going to happen on Saturday for St. Patrick's Day? Tuesday, the 20th, you have the first day of spring, and then March 30th is a Friday, and that is Good Friday, the start of the long weekend. Some things to keep in mind as we get into the month of March, but we do have a time change, so change your clocks. I think most people have them done automatically for them now with all their digital devices, but do not forget. Connect with Harold at 1-800-432-1022. 1-800-432-1022. His website is rarecoloreddiamonds.com. As we start today's program, US dollar 89.79, Canadian dollar 77.60, gold at 13.23, silver 16.44, gold-silver ratio still at 80, very high. Platinum 9.51, palladium 9.81, WTI 61.19, Brent 64.25, nat gas 2.78, Bitcoin in the United States $9,819, and in Canada $12,653. Now, the Dow this morning, as the markets were about to open, 24,942, S&P 2,732, NASDAQ 7,426, TSX 15,496. And Harold, it was a crazy week that continued from last week when Donald Trump came out and said he was going to be putting tariffs, 25% tariffs on different items. And then at that point, it spooked the markets. You ended up having Gary Cohn, one of his top financial advisors. He decided to resign as a result. There were talks about Europe retaliating. Now they've come out here in the last few days and said, well, Canada and Mexico may be exempt if NAFTA is passed. But Trump once again spooking the markets. And it was a very interesting week as a result.
You know, he's at times I just don't think he knows what he's doing, to be honest with you. And my prediction as far as Trump goes, almost all of his people are leaving. I mean, there had to be an exodus of 6 people this week. On top of that, this Russian probe continues to go on. If he is found guilty in that Russian probe, he's going to be impeached. What an embarrassment for the country. And what's that going to do with the markets? So, you know, the fact is that I just don't see him going the whole 4 years. He just keeps on getting into a worse and worse situation and upsetting more and more people. And then his buddy, Carl Icahn, sells all of his steel stocks a couple days before the announcement comes out, which has got to be insider trading. And Icahn and Trump are good friends. So it's just a crazy time, Randy. You know, the markets really don't know what to do at this time. Gold is still trading in a range at around 1325. You know, it was about 3-4 weeks ago that we had gold up over 1350 and approaching that important 1380 level. It wouldn't take anything for gold to break above 1380 from this level. We've seen gold go up $100 in a day many times. I think that one of the major things that is going to move gold is what's happening in the White House. I think that we've got a real loose cannon. Again, I voted for him. He's just not done the job that we thought that he would do thus far. And the fact is that he keeps putting his foot in his mouth. He keeps upsetting all these world leaders. He totally embarrassed and humiliated the president of China. I just don't see things going well for him. And I think that we are going to see, if this Russian probe proves that he did know about Russia's involvement in the elections, I think it's going to affect the markets in a huge way. I think the stock markets will fall and the commodity markets will rise. I think the gold will be the market that will really run at that particular point. So again, at this time, I definitely believe that gold is on the radar. It's trading in a range at this point, but at the higher end of the range. And again, we need 2 closes in a row above 1380 to send this market rocking. So there's certainly situations in the market at this point that could definitely get that done.
I agree with Harold. I think we're in a time right now where hard assets are going to rule the day. And it's interesting to note Paul Tudor Jones, he's a hedge fund manager, came out and said, I want to own commodities, hard assets, and cash. Listen to that. Commodities, hard assets, and cash. When would I buy stocks? When the deficit is 2%, not 5%, and when real short-term rates are 100 basis points, not negative. With rates so low, you can't trust asset prices today. And if you can't tell by now, I would steer clear, very, very clear of bonds. Just think, Greece will have a budget deficit below 2% of GDP by the time ours in the United States grows to 5+%. The markets discipline Greece for its budget transgressions. It's just a matter of time before they discipline us. I think that the time could be starting now for the 10-year Treasury to rise to 3.75 and the 30-year to 4.5 by the year end, and those are conservative targets. But Paul Tudor Jones, very wary of the stock market and believes obviously bonds are a risk as well. Steer clear of bonds, but wants to own commodities and hard assets along with cash. And Harold, I think you're thinking the same thing. Now is a time for hard assets.
At this point, the Dow is very high. It's been going almost straight up since 2008 when it bottomed out at 6,500 and then came all the way up to basically 26,000 with hardly any interruption. We saw basically a 1,600 point pullback, which is no big deal for a market that's gone up almost 20,000 points. But again, the stock market, when all the other countries in Europe and around the world were not doing well, most of the money was coming into the United States. So all the money that was on the sidelines, all the investors in Europe looking for a safe place to put their money into the United States stock markets because it seemed to be the best game in town. Now, at these levels, it's very dangerous. Just like $20,000 Bitcoins were too expensive and very dangerous, and they're now down, to 95, 9,600. You're seeing the same with the Dow. A 1,600 point pullback, really is no big deal for a market that's gone up 20,000 points since it bottomed out in 2008. So, again, I would shy away from bonds, especially if they break above the 4.5% mark, because that's going to cause a huge problem. And as far as stocks, I would not be buying stocks. In fact, let's face it, the middle class cannot buy stocks at this point. They can't afford them. All the major stocks and the major stocks that are moving the Dow at this point are very, very expensive. Google and Apple and all companies like that. And the general public can't afford those. So the fact is that something's going to happen in the very near future. And I do believe a lot of it is going to stem from trouble that President Trump is going to cause. I really do believe that at this point, he's not succeeding. He's losing most of his staff, and who's going to replace him with? The fact is, he's almost like a laughing stock. I just see that the Trump situation is a catalyst that is going to move hard assets much more than paper assets. So that's where we're putting our money at this point. We would definitely recommend gold. At this particular point, again, for confirmation purposes, we'd like to see two closes above 1380, but I do believe at this time the gold is certainly going to stick in there, along with the fact that gold is still staying strong, even though there's going to be 4 interest rate hikes, because you've almost got a contradiction going on. On one hand, the head of the Federal Reserve, Powell, is saying that we could see and we should see 4 interest rate hikes this year, probably about 0.25% each time. So we're going to see over the course of the year about a 1% rise in interest rates. Now, similar to what happened in Canada, a lot of U.S. Citizens are in huge debt. So by raising interest rates, that does not help that situation. On one hand, he's giving us a tax break in the U.S., and that's putting a few extra dollars into the middle class's pocket. But on the other hand, they're going to raise interest rates, and it means that the loans that they have outstanding are going to be more expensive. then on top of that, mortgage rates are going to go up. Just look at what's happening to the housing industry in the U.S. It's falling again. So, it's a catch-22. On one hand, Trump wants a weaker U.S. dollar, so we're competitive in the manufacturing and export market. But on the other hand, he's raising interest rates, to fight inflation that really isn't here at this point. So it's a confusing situation, but I certainly do believe it's going to help the gold market, because we did see back in 1980, 22% interest rates after gold had already hit $850. So there are exceptions to the rule that the dollar can strengthen, and so can gold, given a certain scenario. And it appears to me that if Trump is going to keep a low dollar but raise interest rates, then we're going to see markets react the way that they haven't reacted in the past for a long time, and I believe gold is going to take off. We can offer gold to our clients in kilo form only, so it's not for the smaller investor. A kilo gold right now is about 40,000 US, but we don't charge commissions and we don't charge a spread. And you own the gold outright, we can ship it directly to you. So I'm saying at this point here, I'd rather be 10 days early than 1 day too late, because when the gold market takes off, we went through that. We had an 11-year bull market that we caught right at the very beginning and ran it to the very, very top. I believe we're going to have another kick at the can, and I do like the gold market at this point.
Speak with Harold, 1-800-432-1022, about the program he has in place for you to get hard assets in your portfolio. Gold, silver, diamonds, 1-800-432-1022, the website rarecoloreddiamonds.com. And one of the things that I really believe, very similar to Harold, that you have geopolitical concerns with different countries around the world, but then you add into it, I would call it maybe the Nixon effect worries. Will maybe Donald Trump have to be in a position where he resigns the presidency? And I know a lot of people, a lot of his supporters believe that there's a witch hunt against him, but some of the material that is coming out is obviously starting to show that maybe there are cracks in the foundation of the truth. And in particular, the women that he has been associated with in the past. There was that one porn star who has come out here this week and is suing him. And if there are texts or pictures or Lord knows what, how embarrassing could it get for Donald Trump? And we will have to wait and see. Now, on top of it, you have the United States running massive deficits and debt. Deficit and debt will matter over time. Obviously, stock markets. If the stock markets pull back, we want to be in hard assets. And to give you an idea of what I'm talking about, 2 stories in our free weekly newsletter. Get our newsletter from Harold, the companion to the podcast, 1-800-432-1022. But new analysis shows that there are going to be trillion-dollar budget deficits. A new Washington report says that trillion-dollar budget deficits are returning next year, and that $2 trillion plus deficits are not far off in the wake of Donald Trump's tax cuts and last month's big budget deal. Now, they did the report. It was the Committee for Responsible Federal Budgeting, warns that the separate tax and spending measures, along with increased borrowing costs, promise to add $6 trillion to the nation's already rapidly rising debt in the coming 10 years. It assumes that Washington continues to fail to take steps to rein in spending, and that tax cuts and budget-busting spending are going to be made permanent. The group, which advocates for smaller deficits, curbing financial benefit programs such as Medicare, warns that these projections show a fiscal situation that is clearly unsustainable. And they go on to say that you're looking at deficits. Obviously, there's debt, and the United States is in debt close to $22 trillion now. And then you add in the deficits that they're running every year, which they're projecting $1.5 trillion to $2 trillion. And just recently, they had gotten it down to about $500 billion. it's going to be a snowball that will not be able to be stopped. Now, the other side of it, there's no stopping it. According to Ron Paul, a calamity could cut the stock market in half. And that calamity, according to the former Republican, Libertarian, and former presidential candidate Ron Paul, of course, he was a senator out of, not a senator, sorry, he was in the House out of Texas. His son, Rand Paul, is a senator out of Kentucky. Now, Ron Paul was a doctor. His son is an ophthalmologist, and both doctors in their own right. Now, Ron Paul says that we could very well be heading to a 50% drop in the stock market. For the Dow, that would mean about 12,500 or so. Who does he blame for the looming market catastrophe? The Federal Reserve and the rigged economy. He says, I think we have a greater distortion and financial danger sitting out there bigger than ever before. He told CNBC in an interview, everything is just a very big burden with debt, and there's no stopping it. Paul has been calling for a deep sell-off for a while now. In fact, in August, he made a similar call saying that stocks could get cut in half within a year. So far, not even close, as the Dow Industrial and S&P have obviously gone on to historic highs, despite some turbulence in February. But Ron Paul not wavering on his latest take. The correction is going to happen. I don't think anybody can predict it, but I think this correction we had in 08 and 09 wasn't allowed to go its course and restore some sensibility to the market. I think that will be a mild correction to what could happen. And Harold, you were right. We did have a correction in 08, but it really was March of 09. That's where things really bottomed out. And it was interesting. I was reading Business Insider, and they were giving Obama credit because at that time he was saying, maybe it's a good time to get into the stock market. And lordy, he was right. From that point in time, March of 09, the stock market has gone up. But in my opinion, anyway, due to massive manipulation, plunge protection teams, and obviously keeping interest rates at historic lows, quantitative easing going out and printing money and buying your own bonds. All these things were done to juice the stock market, to make people feel more confident after the financial crisis, Harold.
And I got to say, where I was not a big fan of Obama, I do believe in the face of that crisis, he did an excellent job. I really do. I remember, the chaos going on at that particular time when the derivatives market was going crazy and Lehman went out of business and Stearns went out of a couple major brokerage firms went under. And the fact is that the money markets almost were destroyed at that point if the FDIC did not make the brilliant move to raise the insurance on independent bank accounts from $100,000 to $250,000. Most people would have taken their money out of the banks, and we would have seen our financial system crumble within the United States. So the moves that were made at that particular time really saved the country. Other countries tried to follow suit, but I do have to say, where Obama was not my favorite president at all, he did save the country at that particular time. And bringing in Jamie Dimon, the head of J.P. Morgan at that time, was a brilliant move. Now, again, these major stock firms got huge concessions. Don't forget, most of these firms got bailed out because, all of their stocks crumbled. The banking stocks crumbled. Citibank went from $85 all the way down to $5. General Electric, that we talked about last week, has never recovered. I think their stock is only at $15. It was all the way up at $90 prior to the fall. So we're seeing a situation where they did right the ship. They did make the appropriate moves to print a lot of money. If you remember back then, it was quantitative easing. And they were printing basically trillions of dollars to bail out General Electric, General Motors, McDonald's, all the insurance companies, all the banks. They did what they needed to do, and they righted the ship. And as a result of that, the Dow has gone from 6,500 to 26,500. Do I believe that the market's going to stay there? I think that we are going to have a correction. We have to have a correction. And I do believe that we're in a very dangerous situation because of the present presidential situation. I think the White House is a joke at this time. I think that most people are extremely concerned and see a guy like Donald Trump that is a bully and a boor that is destroying everything that's good about living in the White House type of thing. He's fighting with his wife. Obviously, she believes that he had an affair with that Stormy Daniels, the porn star, and that's got life. That's in the news and was all over Yahoo, all this week type of thing. So if he does get thrown out, impeached, or whatever it is, the embarrassment of rigging the elections would be absolutely horrific for this country, and that could start the fall of the market. However, we've seen in the past that the market could shrug off almost any situation, unless it's a situation like 2008 and 9, where the derivatives market and the mortgage market imploded. It would take an awful lot for the Dow to fall 50%, because there's so much money there right now that it'd be very difficult for that to do that. And there's enough money sitting on the sidelines that if the market did fall, that they would buy it right back up again, because it appears that every time that market takes a major fall, it does come back strong. So again, at this time, I think a lot of the market movement is going to revolve around the White House and Donald Trump. And I do have to say, it is not looking good for him at this point. All the news coming out on Trump is negative. He's making enemies all over the world. He insulted the president of China. They just don't have it going on. And I do believe we are going to see some market movement coming up fairly quickly.
Have an insurance policy in your portfolio, hard assets, gold, silver, diamonds. Speak with Harold, 1-800-432-1022. His website is rarecoloreddiamonds.com. And prior to the porn star coming forward to talk about an affair and possible payoff, you had a Playboy playmate who Trump had involvement with. And it was right around the time that Melania had given birth to their son, Barron. And it was reported on the news that Trump and Melania took separate vehicles to Air Force One, which is highly unusual. So I agree with Harold. There is obviously some strain in their relationship as these stories continue to surface. And with the porn star, Stormy Daniels, going out and filing a lawsuit against Trump, it will be interesting to see how it plays out. But this is like a made-for-TV movie.
I know.
If you were to
ridiculous.
describe what's happening, people would not believe it if you said it 8 years ago. But I do remember back, though, Harold. Harold was talking about it, and he's right. It was the end of the election between John McCain and Barack Obama. And Hank Paulson, who was the Treasury Secretary, phoned then President Bush, who was finishing out his term, and said, "We've got a problem. We need to do something. We're going to basically have a financial meltdown." And that's where they came up with TARP. And as Harold said, everybody fed off of TARP, and it sort of saved the day. Then eventually Barack Obama came in and had to clean up the financial debacle. Obviously took a look at what was happening around the world geopolitically with the United States, being involved in many wars, and had to deal with that as well. But it was a crazy, crazy time. And you never had the risk, though, of a president being impeached or being in a position where they may have to resign with Obama. You have to give him credit. A good man, an honest man. You may not agree with his politics or how he ran things, but I believe he was an honest person, and there was never really the threat of him being impeached or even having to resign, similar to Nixon. And with Trump, it just seems, Harold, if he can make it to 4 years, I can't see how he could get reelected, but you never know. Things can change. But if he can just even make it to the 4-year end of his term without being impeached or having to resign, I think that literally almost might be a miracle.
I think so too. I would bet that he doesn't make the 4 years. I just don't see it. I mean, living in the United States, seeing this every day, seeing what's going on, it's like a carnival. It's ridiculous. Fighting with his wife, he almost fired his daughter and Kushner, her husband. Most of his staff has been fired or walked out. There's this Russian probe. There's the enemies that he's making. And again, if he gave inside information to Carl Icahn days before he came out with the tariff on steel and steel prices plummeted, Carl Icahn hasn't sold his steel holdings in umpteen years. How is it that a couple days before the market plummets, he sells $30 million worth of stock? It's unbelievable. And again, I just don't see him making the 4 years. And I do believe that he's not suited to be president. Many people do. He's got the people that follow him are, are different type of people. Let me put it that. And I just don't think he's going to make it. I think that this is going to end in embarrassment, and I think it's going to end in confusion. And I don't know what in the world that they would do in the United States if they get rid of Trump. I mean, does that make Mike Pence the president of the United States? That would be probably just as bad as having Trump in there. So I don't like the way things are looking at this point, and I do believe we are in the midst of some excitement coming back into the markets that have been basically stagnant for the last couple of years, for the last year.
Speak with Harold about investing in hard assets, 1-800-432-1022. His website is rarecoloreddiamonds.com. Get our free weekly newsletter, companion to the podcast. As I say, we put it together in a way you can be totally up to date on the week's events in minutes, or spend hours if you want. It's really up to you. One of the things we do want to pass on, the Bank of Canada did not raise interest rates in Canada on Wednesday. They are on hold, which does not surprise me. BlackRock came out and said that they believe the market is being too aggressive in pricing in Canadian hikes. Now, it looks like in the United States, they could raise interest rates 3, possibly 4 times this year. Now, the feeling was that in Canada, we could get 2 to 3. Well, BlackRock is saying, whoa, wait a minute here. We don't think that's going to be happening because the Canadian economy is in a little rough shape. They're actually calling for a situation where we could see not as many rate rises in Canada as the United States. As a result, that could be a drag on the Canadian dollar. One of the things we wanted to get to before the end of the program, and it's good news, Harold. I found this story yesterday. Good news for those invested in rare colored diamonds, those in particular with argyles, pinks, reds, anything from the Argyle mine. Rio Tinto slashes the Argyle outlook. It has lowered its estimate of diamonds it can visibly extract from the Argyle mine. Now remember, the rare colored diamonds, the colored diamonds, are secondary to the diamonds they're pulling out of there. So that means it's going to be even more difficult for them to find the rare colored diamonds for their Argyle pink tender, which happens once a year. And they're saying they're experiencing operational difficulties, and they've reduced the price forecast for the stock. And it's just a situation, and you can read it in our free weekly newsletter, that they've cut their expectation for the mine from 2020 and 2021 to really probably about 2020. And one of the reasons that's happening is that they're just finding the reserves are not there. The lifespan is coming up, and they're depending on the mine to perform. It is not. And Harold, obviously, for us that are in the position of holding rare-colored diamonds, pink diamonds, red diamonds, any diamond from the Argyle mine, hearing more about scarcity is a positive when it comes to the price.
Again, we were banking on the fact that the mine was going to close around 2020, and it looks like that's right on line. The fact is the Argyle mine produces 95% of the world's pink diamonds, and they're not going to find any more. I believe that the price of pinks are going to rise substantially. We're excited about it. We took advantage of it many, many years ago. We bought diamonds, pink diamonds, when the prices were low, and we're going to give it a chance for the mine to run out for the first couple of years, and then when there's a shortage, then we'll start to put our diamonds up for auction, and I believe our clients will do extremely well. So this is a situation that very seldom would ever happen, that a mine that produces 95% of any kind of diamond is going to close down. I don't think that we'll ever see a scenario like this again.
Speak with Harold about investing in hard assets, gold, diamonds. Connect with him at rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number 1-800-432-1022. And I think it bears repeating what Paul Tudor Jones said. I want to own commodities, hard assets, and cash. He's saying that he does not believe in bonds right now. He does not believe in the stock market. He is very concerned about what's happening in those two markets, stock and bond market, and really thinks now is a time that people be in hard assets based on what's happening in the financial markets. And Harold, we've come to the end of another podcast. Once again, thank you for your knowledge and another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
If you've never been to rarecoloreddiamonds.com, go take a look around. It really is the world's leading area for rare colored diamonds. It's like going to a museum online and you have the opportunity to invest in those naturally fancy colored rare diamonds, the rarest of the rare, museum quality investment pieces that you can have in a portfolio and pass down from generation to generation. rarecoloreddiamonds.com. Don't forget about Harold's gold program that he has in place. Learn more. You can be making money immediately on the gold program. 1-800-432-1022, 1-800-432-1022. That's it, another edition of the World Financial Report podcast. My name is Randy Marshall for Harold Siegel. We will talk to you next week.